Hello, everybody. This is Toni Turner, and welcome to the market now as of Friday, December 11th, near the close. Well, the S&P 500 and NASDAQ were lower today after uncertainty over fresh economic stimulus dented confidence, although strong gains from Walt Disney helped keep the Dow Industrials afloat. While recent data has shown a faltering recovery in the labor market, a survey from the University of Michigan today showed consumer sentiment improved more than expected in November, while a gauge of inflation rose moderately. So we will have to watch that inflation. And on that note, let's go into three charts that could give us some insight into the week to come. First of all, as we always do, we're going to look at a daily chart of the S&P 500 SPDR, symbol SPY. Of course, this is the ETF that closely follows our benchmark index. Now, this past Monday, the SPY made yet another new all-time closing high, this green candle right here, at $370.17, which is about $3,700 on the S&P 500 itself. Now, it's slipped a bit south since then, and today when I captured this chart, the SPY was trading at $366.27. You can see it's just sitting atop its 20-day moving average. The red line is the 20-day simple moving average. It's sitting just atop that line, and that line's coming in at $363.41. So it does have support right where it is at 363. Then we can see more coming down here at a little over 353, 354, and of course at the 50-day moving average right at $351.22 today. So we do have, of course, then if we want to move down, we can get more support down here at about 320, these lows from September and October. So lots of potential support here if the SPY does need to slip south. Resistance, of course, is up here at this all-time high at 370, where it made the all-time high before, right at 370. So right in here, we'll have to see if the SPY can hang tough. Again, it depends on the stimulus bill, I imagine, whatever Congress is going to do in this coming week. So we will see here if it needs to take a rest stop here, needs to calm down a little bit. It did look a little more tentative the last few days, so we'll see. Please do keep your protective stops in and trade wisely. Our next chart, this is a chart of the Invesco QQQ. Of course, it represents the NASDAQ 100, a major index in the market, with top holdings including Apple, Amazon, Alphabet, Facebook, Netflix, that whole group. Now, just like the SPY made a new all-time high this past week, and I'm sorry, it wasn't Monday, it was Tuesday, excuse me. So on December the 8th, which was Tuesday, the QQQ also made a new all-time closing high at $308.29. And when I captured this chart today, the Qs were sitting right on the 20-day moving average, just like the SPY is. And right now it's coming in at $301.33. So both these indexes sitting on their 20-day, their simple 20-day moving averages. Now we can also look here, and if we connect the two, if we draw a horizontal trend line and connect the two highs from September, October, we can see that what we have here is kind of nice. We have a coming together point here of the 20-day moving average, again coming in at 298.34. We have that 20-day moving average. Then we have these highs from back at the end of September and in October. These pivot highs here can also provide potential support for price. So when you have price support and indicator support, that can sometimes mean that it can turn out to be a little stronger than simply one or the other. Of course, we've got more potential support down here at the 50-day moving average, coming in right now at $289.52. Then we can go down to the November low at 267. then down to the September low at 260. So when you see all of this, we see that if the Qs need to rest in the coming week or so, that there is quite a bit of potential support below it. So we'll have to keep an eye on it. Potential support doesn't mean that it's absolute support. It just means it's there. And then, of course, if support is broken, we note that and say, hey, when the buyers were supposed to show up at these support lines, they didn't do it. They put their hands in their pockets. So that, of course, is a slightly negative connotation versus bouncing off these support lines and potentially moving higher. So keep that in mind in the coming week. As the momentum stocks in this index have been market leaders, their direction could give us clues to where the broader market may go in the coming week. Our final chart today is the Communication Services Select Sector Spider, symbol XLC. We haven't looked at this in quite a while. So many of the indexes I've looked at recently have been so overbought. So this one perhaps has a little more potential upside to it, at least at the time being. Now, the Communication Services Select Sector Spider, symbol XLC, it has 26 holdings in it, and some of these truly are at all-time highs. Facebook, Alphabet, Disney, of course, we all know how that's taken off in the past week. T-Mobile and AT&T are some of the top holdings in this ETF. Now, when I captured this chart today, the XLC was trading at $66.94, just above its rising 20-day moving average, which is coming in at $65.61. Now, as I usually do with these ETFs I give you on the last chart, I look up their all-time highs just out of curiosity to see where they have been. And what I found that I kind of knew anyway, the XLC is a relatively new ETF, and it was started in June of 2018. That's when it started trading. So actually, it made its new all-time closing highs this week, and it did make it on Monday, and the closing high on that day was $67.40. So that was December 7th at $67.40. This little candle you see right here. Of course, it pulled back from there, back to its 20-day, but then bounced today. So stocks like Disney are really flying in this ETF. But AT&T, which is also a component, is just starting to make up for lost time. If we look left, we can't see it here, but if we could see our March lows, the XLC did fall to March lows of about $39, but then like most indexes rallied from there, walked up its 20-day moving average, and at this time right here in April climbed back above over its 50-day. It's mainly stayed above its 50-day moving average, getting some hiccups here in September and October with most everybody else. Then bounced up again, the 20-day crossed over the 50-day, which is always good news, and has been since the end of October kind of walking up its 20-day moving average. So right now, again today, when I captured this chart, the XLC was trading at $66.94. Now, what I think I'm going to do here is if the XLC can remain positive in the coming week, and guys, you got to keep an eye on the SPY at all times, because that's really your guideline for not all, but many stocks and ETFs to see what they're going to do next. So if the XLC can remain positive in the coming week, and if it can remain above the 50-day moving average, which is now coming in at $62.86. That's the level where the 50-day moving average is right now, $62.86. If it can remain above that, and believe me, if the XLC starts falling, if the market starts falling Monday and the XLC does too, I'll just let it go. But I'll see if it can stay above the 50-day moving average, and if it does that and jumps up, then again, as long as it's above the 50-day, I may add a small position to my trading portfolio. Now, when and if it can climb above this 60 level, resistance level, or 68, I should say, above that all-time high, I may add to that position and I'll turn my stop into a trailing stop. And my initial stop is going to be set here below the 50-day moving average at $62.50. So if I add to the position, and probably before then, I'll make my stop a trailing stop for sure. And again, may possibly add to the position when and if the XLC can rise above $68. So you may want to keep an eye on the XLC during the coming week. And now on to final thoughts. But before we get into that, please know if you'd like to become a more successful trader, this is a great time to check out my trader training programs. You will love my powerful strategies devoted to swing trading, trend trading, bottom fishing, winning setups, and many, many more. My programs are easy to understand and they can help you increase your gains quickly and easily. To see all of my online trading programs, simply go to the link on this screen or click on the orange button below. And now, for final thoughts, ask yourself this: when the market starts down and my positions fall with it, do I know what to do? When the market heads down, maybe you get worried and maybe your mind starts to race. Maybe if things look bleak enough, your heart starts to race also, and panic even flows through your veins. And your brain starts asking, and this is what mine sure did, what if X happens? What if this happens? What if Y happens? What if that happens? What if, what if, what if? And then you fall into great anxiety and even panic. Please don't head down that rabbit hole. You may remember Alice's Adventures in Wonderland. The rabbit hole is the place where it all begins. It's Alice's unthinking decision to follow the white rabbit down that rabbit hole, and that leads her to all of her adventures. Since then, going down the rabbit hole has become a common metaphor in popular culture, symbolizing diving into an unknown experience. And that may be fun for Alice, but it might not be fun for you if the market's headed lower. So, when we see the market falling, we can easily head down the mental rabbit hole of panicky questions, which can lead us to make less than wise decisions. Let's not do that. Instead, ask yourself, calm down, take a deep breath, and say, what is the next step? Have you ever encountered a falling market before? I imagine you have. What did you do, or what did you not do, that got the best results? The secret to calm and focus is simply deciding what you need to do next. That prevents the gap from opening up where the speculation and the worry grows. Just make sure you are thinking technically, meaning not emotionally, and specifically, which will help you avoid panic. In a falling market situation, think of next steps like these. Where is my protective stop? Right here. Maybe you want to go make that a hard stop with your broker so you automatically get taken out of the trade at a logical price. Or if you see the market falling really hard and you want to get out right where you are, fine. But try to stay calm and focused. If there is no stop, where is your stock's next support level on a daily chart? Now you saw how I drew support levels on the SPY, on the QQQ, on the XLC. You saw how we did that on a daily chart. We looked at price support and we looked at indicator support. So you could say, where is my stock's next support level on a daily chart? And you could use that also as a level if the stock goes under it to sell it for a protective stop. Next, you're going to see where is the next support level for the SPY. Check out what the SPY is doing. If it's just made a dumpster dive through the 50-day moving average and is heading south, your stock will probably follow. Many stocks do. Most stocks do. So maybe you want to say, hey, if the SPY's headed lower, my stock's going to too, I better get out here. It's that kind of thinking. So when you encounter a negative market and your stocks are falling, to stay calm and to make the best decisions, focus on your next step. Here are steps right here. Focus on your next step and the next and the next. That will keep your mind on the most productive track and keep it from running down stress-producing rabbit holes. Finally, if you'd like to become a more successful trader, again, check out my trader training programs. My simple yet powerful strategies will help you increase your gains quickly and easily, and they will keep you out of those rabbit holes. To see all of my online trading programs, simply go to the link on this screen, which is right here, or again, simply click on the button below. Until next week, keep green on your screen. I'm Toni Turner, and this is The Market Now.